stock markets or forex markets. Right, so welcome to a brand new series, right, called Answering Your Questions, right, where in this series I'm going to literally answer your questions, right. Answer some of the questions that you have put, right, maybe in the comment sections, right, or maybe some of the questions that you have direct messaged me, right. Some of the questions that I think is highly valuable, right, or I think that is going to help a lot of traders, right, in improving their trading skills, right, then I will record a video, right, just to answer your questions, right. So as usual, remember to leave me your feedbacks, right, because my channel is really depends on your feedbacks, right. My channel is really developed based on your feedbacks. Okay, so just leave me your feedbacks, right. Tell me what you love, what you hate, what you don't like, what you want more, right, from this series, from this video, from my channel. Okay, so, and as usual, remember to subscribe and hit the bell, right, so that you never miss another video from me. Okay, now wow, it's hot. Oh my god, Malaysia is hot. Malaysia is hot. Okay, so yes, stock markets or forex markets. Now, this is a very commonly asked questions within the beginners, right? Within the new guy, right? Within the retail guy, right? So most of them, they're asking, okay, if I'm going to start my trading career, right, should I start in trading stocks or should I start in trading forex, right? Now, for a new guy, right, completely new, right, so I mean that someone who know nothing about trading, right, or someone, like you just open your account like yesterday, right. If you are completely new, you know nothing about trading, then you should first start your investing, your trading, right, your learning about the financial markets, right. You should first start in the forex markets, right. Now, I'm saying this not because that forex market is the biggest market in the world, right. It's not because forex market is the most liquid market in the world, right. It's not bullshit like that, right. This is not the reason, right. The reason I encourage you to start your trading, start your learning in the forex market is that the foreign exchange market, the currency rates, right, the exchange market itself is basically a indicator, a mirror, right, of the macroeconomics of that country, right. So for example, the exchange rate for US dollar, right, it basically is the mirror of the macroeconomics of the US, right. Because as a currency trader, you must understand that the price the price driving factors for the currency is really the macroeconomics of the country, right. Things like inflation, right, things like employment, right, things like consumer and business confidence, right, things like that, right, is basically going to show you whether the future outlook of this currency will be inflationary or deflationary, right. And it basically tell you, right, whether the value of this currency is going to increase, right, or is going to be decrease in value, right. So, and if you are able to understand, right, and if you're able to read, right, the macroeconomics of that country, you can then predict, right, the future exchange rate for that country, right. So if you figure out that okay, US is going to experience a inflationary period, right, then you should short the currency, right? Because from a inflation terms, right, if you experience a high inflations, right, your buying power, your value of the currency is going to decrease, right? It's a very simple economic rules, right? And if you are not familiar with it, if you have no idea on how inflation is going to affect the buying power, just search it on Google, just search it on YouTube. There are tons of video talking about it. Okay, so the point is, if it's going to be inflationary, right, if the outlook is going to be inflationary, then you should short the currency, right? And you need to look on different economic data and different macroeconomics indicator, right, to determine whether the outlook of the economy is going to be inflationary or deflationary. Okay, and this is basically how you generate profitable trade ideas in the forex markets, right? I know it's complicated, I know that is boring, but hey, this is the way, right? And this is one of the reason why 90% of people, they lose money, right? Because they never go and understand and properly analyze this data, right? For a retail guy, you know, the sexiest, right, the most exciting part of trading is really just looking at the charts, right, drawing lines and, you know, buy and sell, right, when the line crosses another, right, for example. Okay, so they really don't understand the economics behind the exchange rate. Oh my god, it's hot. It's really hot. Okay, so they never go and understand it. And if you want to be profitable in the forex market, you should first understand all kinds of macroeconomics, right? And here is the thing, right? Once you understand the macroeconomics, right, you are basically able to generate your trade ideas on different markets, right? So you can basically implement what you learned, what you understand about the macroeconomics, right, and implement into the forex markets, the stock markets, the commodity markets, and the bond markets, right? So for example, if after you have done your research, right, you have done your analysis, you think that okay, the US dollar is going to decrease in value, right? The exchange rate is going to depreciate against other currency, right? So what you can do is that you can just short the US dollar against the other currency, right? You can short the US dollar against the yen, for example, right? For example, right, you can short the US dollar against the yen. Okay, I'm not telling you to short. I'm not telling you to short the US dollar yen right now. Yeah. Okay, so if you, for example, if you know this, right, you know that the US dollar is going to depreciate, right? So the first trading idea is that you will short the US dollar. Okay, so this is the first trading idea. Now, the second trading idea probably is that you can go into the stock market, right? You can long travel company, right? Or you can long local retailers, right? Why? Because first, if the US dollar is going to depreciate in value, right, this is going to encourage, right, people from other country to travel in US, right, because the US dollar is getting cheaper, right? So for them, the US dollar is getting cheaper, and they think that okay, this will encourage them to travel in the US, right? So if they're going to travel in US, right, travel company, right, airline companies, right, they are going to make more money, right? Their EPS is going to increase, right? Their EPS expectation is going to increase, is going to revise higher. Now, this is going to push the price of this company higher, right? So you see the point here, right? You see the point here, right? So just by understanding, okay, the macroeconomics, right? I know that the US dollar is going to depreciate, right? And first thing, I can short the US dollar. The second thing is that I can long, right? I can go to the stock market, I can long the travel agencies, right? I can long the airline companies, right? I can long the local retailers, right? Which is specifically targeting the travelers, right? The tourists, okay? Right? Because as the US dollar decrease in value, right, it will encourage more tourists, okay, more traveler, right, into the US dollar, right, basically making them a lot of profits, right? And once the company is expected to make more money, the stock price of the company is going to increase, right? So it's not just can you see it's not just in forex markets, right? It's linking together with the stock markets, right? So if you are able to understand and learn the macroeconomics, you are able to generate tons and tons and unlimited amount of trade ideas across, right, across the entire financial markets, right? So as a beginners, you should really focus on learning, right? Learning the macroeconomics, right? And one of the very good way is that you trade the forex markets, okay? You trade the forex markets and you learned how to analyze and how to interpret and how to evaluate a country economical strength and a country economical health, okay? And once you understand, right, the economical the economy, the macroeconomics of that country, you can then use these informations, right, to generate different trade ideas, okay? So you see how it links, right? So stock markets or forex markets, well, if you are complete beginners, go for the forex markets, right? First, learn how the macro affects the economy and affects the exchange rates, okay? Because by understanding these two things, right, you can basically generate a lot more trading idea, okay? So, and this is how hedge funds and pro traders we generate our trade ideas, right? This is called a top-down approach, right? Basically start from a macro thing, right? You analyze, the economical situation around the globes, right? And then narrowing down, niche down to a particular country, and niche down to a particular sector, niche down to a particular industry, and niche down to a particular stock company. And this is how we generate our trade idea, okay? So tell me what you like, what you hate, okay, about this series, right? Make sure to subscribe and hit the bell, right? I'm going to see you on the next video.